Hey there, today is your real estate market update. We're a couple weeks into the month of May. I cannot believe we're already in May. I hope you're having a great year so far. We're going to look at what's gone on historically in the triangle. We have data through April. We'll look at some trends, what's going on today. And we'll finish up talking about home prices, mortgage rates, and what happens to the housing market typically if we go into a recession. So I'm going to share my screen and we will get right into it. I'm going to start out a little different today. I'm going to look at the entire triangle MLS, Durham County, and Wake County. I sell a lot in Durham and Wake County, so I really try to keep tabs as to what's going on in those counties. But this is the entire triangle region. Data for year to date is over here, and then for the month of April is right over here. And so a couple things to call your attention to. One, new listings are up for the year. They were up for April. Closed sales are flat versus last year. They were down in April. And then when we look at the median and the average sales price, relatively flat versus last year for the year to date, and then off slightly for the month of April. So I know there's a lot of headlines out there that home prices are coming down and that Zillow says is projecting a decline now. And there's some concern over what's going to happen with home prices. And so when you have that concern and uncertainty and you see a lot of those headlines, it causes people to think the housing market is going to crash. That coupled with people talking about, a recession and economic uncertainty and things like that. So we'll talk a little bit about why a housing crash in the housing market is unlikely. But this is what's going on with prices today. So slight declines for the month of April, relatively flat for the year to date. What I am seeing in the market is price reductions on listings available for sale. And that's shown in these two percentages here. So what these percentages are showing is this first one is what percent of the original list price are sellers getting on average. So if you're listed at 625, the average seller is getting about 97% of that original list price. This second percentage is like, what was the last list price? So if you were listed at 625, you reduced to 600, the percentage sellers are averaging is about almost 99% of the last list price that was out there. So what we're seeing are some price reductions. Demand is cooling a little bit. Homes are staying on the market a little bit longer. We have a little bit more inventory available. This isn't a bad thing. This is a great thing, actually, if you're a buyer in the market today. So there's more options available to you because you can see that in the new listings. Homes are staying on the market almost a month year to date numbers. And then when we look over here for the month of April, around 3 weeks, that's still not a long time on market, but it gives you a little bit of an opportunity to maybe visit a home once or twice, get all your questions answered. There's a little bit more room to negotiate. Obviously, when you look at these percentages, buyers are negotiating home prices down. There's options for seller concessions, maybe negotiating in some repairs. So we're kind of getting into the more normal, more balanced market. And so that's a good sign. It's the sign that the market is getting healthier. So that's what's going on in the entire triangle MLS. Durham County, we saw some of the same trends. New listings are up. Sales are actually down for the year, and they were down quite a bit in the month of April. But home prices have had the exact opposite of where we've seen large increases for both the median and average sales price, and we saw good increases in the month of April as well. So that kind of goes against what we saw in the entire triangle MLS. We see the same trend with reductions in list price. So sellers are getting 97.4% of the original list price, almost 99% of the last list price received. Homes are staying on the market about a month and about 3 weeks for the month of April. So sort of similar, some differences with regard to what's going on with the median sales price and the average sales price in Durham County. When we look at Wake County, sort of similar trends. Listings are up for the year and for the month. Closed sales are actually down for the year and for the month. And then we see it's sort of similar to what's going on in the entire triangle region. I mean, Wake County is such a huge county in our area, has almost 1 million people. So similar with regard to median sales price and average sales price for the year, relatively flat versus where we were last year, but saw larger declines in both median and average sales price for the month of April. Homes are staying on the market about the same in both the month of April and year to date. And then we see the same trend with regard to what percentage of the original list price and the last list price are sellers averaging in the area. So 97.4%. And then 99% of the last list price received. So that's just a high-level overview, the entire triangle MLS, Wake County, and Durham County. there is a lot of talk about inventory increasing, and I think that's something that's important to talk about. So we'll look at month supply. And this is, again, the entire Triangle MLS. It's Wake County, it's Durham County. And you can see since December, we've been seeing inventory increase every single month. And so this is a month supply. And yes, this shows month over month, monthly compared to April 2024, you can see inventory has increased significantly in all three areas. But when you look at the actual month, 3.1 month supply for the MLS, 2.8 for Wake County, 2.9 for Durham County, that's still really a low level of inventory. A normal balanced market is about a 6-month supply. I do always like to show this. It's been a long, long time, over 10 years since Wake County, Durham County, or the entire Triangle MLS has seen more than a 6-month supply. So we're still a long way away from that. And I think if rates do start coming down in the second half of the year, we're going to see these inventory numbers drop in potentially. So days on market, I will go back to 1 year. So typically what we see when we go in the winter months, days on market increases. January is typically our slowest month. Then we start to see the days on market come down because more buyers are buying during the spring market. It has been a little bit of a slower spring market, but we've still seen that trend where the average days on market has come down from February to March to April. And then obviously we'll see what happens in the month of May. Homes available for sale, we've seen that trending up. We talked a little bit about that, and new listings trending up. Again, it's not unusual to see new listings trending up into the first quarter and into the spring market because a lot of sellers wait until the spring to list their home because that's typically the best time to list your home and sell your home. Historically, that's when the most buyers are coming out into the marketplace. Again, it's been a softer spring market than we've seen in the past. I think some of our business is going to get pushed into the summer months. But we'll just kind of see what happens. So that's what's gone on historically in the Triangle. What's going on today in the Triangle? Well, in Raleigh, Cary, and Durham, we have just over 3,000 homes available for sale. There's just under 1,950 that are under contract. And then for the month of May, 383 have closed. Now we're 13 days into May, and we might be off slightly from our sales pace last year. Last year, Raleigh, Cary, and Durham combined sold 1,243 homes. So it might be slightly behind our pace there, but we'll see how things shake out as we get into the rest of the month. Wanted to finish up with just some high-level information about home prices, what's going on in the mortgage industry with mortgage rates and things like that. Wanted to start out with a quote here from Business Insider. So I read recently that 70% of Americans are concerned about a crash in the housing market. So many Americans believe the housing market is at risk of crashing. The economists who study the housing market conditions generally do not expect a crash in 2025 or beyond unless the economic outlook changes. And Freddie Mac says we expect the pace of house price appreciation to moderate from levels seen in 2024 while still maintaining a positive trajectory. So, and I'll point this out as well. So there's a lot of, this is as of April 1st. So this is a little bit older. And I know since April 1st, Zillow has come out and said that they're projecting a decline in home prices. But one of the things I would point out is there's a lot of experts that are projecting that weigh in on what's going to happen with home prices. And so you can see there's a ton of them, and the majority of them are projecting an increase in home prices. If you average everybody out, it's going to be around 2 to 3%. So the majority of experts are still projecting that home prices are going to increase in 2025, but it's going to be at a slower pace, and that's okay. I mean, when you look at the last 5 years, what's happened on a national level, home prices increased over 57%. Well, that's way above the normal rates. We're just coming back down to normal home price appreciation. And you can see that in this chart here as well. So year over year home price change that's seasonally adjusted. You can see what's happened over the last several months. One of the things that's been impacting the market, obviously, is mortgage rates. There's a lot of volatility in the month of April. I always like to look at Mortgage Daily News and see what they say about mortgage rates. So here's where they're at today with a 30-year fixed. So definitely seeing a lot of volatility, and that has impacted affordability and what's going on in the housing market. There's economic factors that are influencing what the feds are going to decide with regard to rates. They just said that they're recently that they were not going to make any changes. Their inflation remains above that 2% target, and then unemployment remains relatively steady. However, despite all of that, experts are still projecting that mortgage rates are going to decline throughout the course of the year. Now, that doesn't mean we're going to go back to 3%. I think that's important for people to be aware of, especially those folks who are sitting on the sidelines waiting for rates to come down. It'll be a long time before we see rates at 3% again. But this is what the experts are averaging for the second quarter 2025, what the third quarter, what they're projecting rates to look like or average throughout the third quarter, and then finally in the fourth quarter. I think if we see, and Lawrence Yun says, if we have a meaningful decline in mortgage rates, it's going to help both demand and supply. It's going to increase affordability for buyers, and then it's going to help loosen up some of that supply. There are a lot of sellers out there that may want to move or need to move, but they either can't afford it because the rates are higher, or they don't want to move because they have such a low rate locked in. So a meaningful decline in mortgage rates would actually loosen up some of that, and some of these folks that probably need to move would get to a point where they'd put their home on the market. I think I read a statistic that sellers have said that they have to get below 6% in order for it to be meaningful enough for them to put their home on the market. But if you look at the projections, if we're really at the low sixes by the end of the year, who knows what's going to happen in 2026. Talks of a recession. I know there's been a lot of talks of recession in the news. Even in an economic recession, generally home sales can rise if mortgage rates decline. So I know that folks think anytime there's talk of a recession, everybody thinks of what happened in 2008. The housing market crashed. But if we look at historically, during the last 6 recessions, home prices actually increased in 4 out of 6. And then if you looked at what happened in 1991, the decline was relatively flat. So really, what everyone remembers and thinks of is 2008, but that was kind of an anomaly. That's not the norm, especially if you look at what's gone on historically. So a recession does not mean falling home prices. We've seen them increase in 4 of the last 6 recessions. What it does mean potentially, and I know I've shared these slides before, but I know there's increased concern and uncertainty. A recession may mean falling mortgage rates. So in the last 6 recessions, mortgage rates have declined, which ultimately obviously have impacted home prices. Makes it more affordable for buyers, brings more buyers into the marketplace. So that has a positive impact on home prices and home sales. So that is your real estate market update. If you have questions on the local market, what's going on in your neighborhood or things like that, don't hesitate to reach out. If you want more information like this, buyer tips, seller tips, check out my YouTube channel. I think today, for sellers that are people that are thinking about selling their home today, what's more important than anything else is making sure your home is ready for the market. So you've done all the repairs, you've gotten it cleaned, you've done all the things that you need to do. If it needs paint, if it needs flooring, things like that, you've taken care of that, and you make sure your home is going to show beautifully. And then the second step is pricing it right and being realistic about what's going on in the marketplace. We're not in the marketplace anymore where you can just slap a number on it and you're going to have a million offers. We really have to dial in prices today and be much more strategic. I think if you're a buyer in this market today, it's a great time to buy. As looking at the data, sellers are coming off that list price. You can potentially buy a home for less. You can potentially negotiate seller concessions in, and you may be able to negotiate in repairs or money in lieu of repairs, things like that. So it's a great buying opportunity right now if you can swing it at the higher rate. So if you have any questions, don't hesitate to reach out. I look forward to talking again soon.